In this short video, I will explain some of the basics of Forex trading, and I will also reveal how to claim a free copy of the new ebook, How to Trade Forex, written by New York Times best-selling author and veteran trader, Vince Stanzioni. The foreign exchange market, or Forex, is the world's largest financial market, trading seamlessly 24 hours a day, from Sunday 2200 GMT to Friday 2100 GMT, and runs via a network of banks. There is no actual trading floor or exchange. Over $6.6 trillion a day are traded. Companies around the globe will use the FX market to exchange currencies to settle commerce. For example, a company in the UK needs to settle a US purchase. They would exchange sell pounds and buy US dollars. A large part of the daily turnover comes from trading done by banks, but today, thanks to Deriv.com, smaller investors and speculators can also participate in this market. You would profit from making trades on one currency, gaining or weakening against another. No physical notes change hands, and in most cases leverage is used, which allows you to own a larger position with just an upfront margin. For example, a $100,000 US position could be held with just 2% margin, $2,000. This would be a 50-to-1 leverage. The US dollar, or USD, remains the world's biggest currency and forms part of most Forex transactions. The largest currency pairs are the euro versus dollar, the US dollar versus Japanese yen, British pound versus US dollar, Australian dollar versus US dollar versus Canadian dollar, US dollar versus Swiss franc, and New Zealand dollar versus US dollar. As well as currency pairs, we can also have currency cross rates, which do not involve the US dollar. For example, the British pound against Japanese yen. Gains and losses are expected in PIPs, which is short for percentage in point. All currencies except the yen are traded to 4 decimal places. There is no commission charge to trade FX. However, there is a spread, which is the difference between the buying and selling price, known as the bid and offer. Tighter the spread, the quicker your trade can move into profit. Ready to learn more about the Forex market and practice trade? Then grab your free ebook and a Deriv demo account by going to www.derivtrade.net.